Welcome to the Business Standard Banking Show. CSB Bank, earlier known as Catholic Syrian Bank, is on a steady growth path, which reported rupees 547 crore net profit in FY23, up 19% over the previous year. Pralay Mondal, MD and CEO of Catholic CSB Bank, who took charge last year, is here with us today to share his plans. Mr. Mondal, welcome to the show.
Thank you, Manojit. Thank you for having me on your show. Thank you so much.
So you will be completing the first year of your 3-year term in September this year. What are the milestones that you want to achieve in your first term?
See, Manojit, I think 3 years is a small period compared to what we want to achieve in the long run for the bank. But yes, we are having milestones. One is for the next 3 years, and then more importantly for SBS 2030, which will end in 2030, by which we want to be in the mid-sector category, in the mid of the mid-sector category. And then from there, we will take a further growth plan from there. So what we have done is we have divided these 7 years phase into 3 parts, and we call it SBS 2030 sustain, which is sustaining what you have done well so far, then in parallelly build for the future, and then scale it out from there from FY26 onwards. As you know that as a bank, while we are a 100-year-old bank, more than 100-year-old bank, but we have started a very different aspirational journey of growing the bank, and we will grow faster than the system by at least 30 to 50 years over this next 7 years till SBS 2030. And in these 3 years also, we'll grow faster than the system, at least by 30 to 50% on our balance sheet. If you look at the last year, which I completed, though I took over formally as a managing director last year in September, but as an interim, I was also looking after as a managing director from April, and hence I was accountable for delivering the whole of last year's business. So we grew by almost 30% in assets growth, and we grew by 20% in liability growth, which was on liability, it was 2 times faster than the system, and on assets it was 80% faster than the system. But percentage doesn't mean anything for such a small balance sheet size at this stage. It's relatively easier. But as we go into next year and next year, the primary objective is just not growth. Primary objective is to build the building blocks of the bank. And the building blocks includes technology to start with, the right leadership team, the right geographies, and the distribution, and the digital framework and process, straight through processes and service framework. So these are the places where we are investing in a very, very big way. We are revamping our entire technology platform. Almost there will be nothing in the bank which was there 2 years back. Okay, whether it is a core system, surround system, LOS, LMS, you know, the APS, whatever you call it, we are putting everything new, and we are heavy lifting the investment in the next 2 years on technology. On the leadership, we are almost done. 70-80% of the leadership team has already joined, 20% more to go, and all of that will be over by end of this calendar year, not even financial year. By end of this calendar year, our entire new leadership team, including some of our old great leaders, will be a part of this journey. We will continue till SBS 2030 and beyond. Right. On the service framework and distribution, we are adding 100 branches every year. This year also we'll add 100 branches. 60% of those branches will come in North and West, because we are now becoming a pan-India geography-focused kind of a bank. And we are going to launch all products and services, be it on retail, be it on SME, or be it on wholesale. The planned business mix is already we are strong in gold loan. The planned business mix SBS 2030, that is my 2030. The plan is to have 20% gold, 30% retail, 20% wholesale, and 20% SME, and 30% wholesale. And in the near future, the real heavy lifting on the retail will happen FY26, 27 onwards, because we'll launch those products, test those products, etc., and season them. And in the short term, the gold loan will continue to be our heavy lifting in terms of revenue, so that we can invest into the bank. So that's broadly in a nutshell.
But coming to the current financial year, what kind of loan growth do you expect in the current financial year?
Difficult to giving forward looking, but if I can just break it up, Nominal GDP, let's say it's around somewhere between 10 to 12. So hence credit growth expected to be similar to what last year was, maybe around 14% or so. So take a 50% faster than that growth. So given all of this, I think anything upwards of 20% is given. We'll try to do better than that.
One area of concern is the CASA, the current and savings account deposit, which is slightly lower than your peers. It's a 32%. What are the strategies the bank will take to increase the CASA?
No, very, very good question, Manojit. Let me explain this. This will take a while. So CASA ratio is just a ratio. CASA growth will continue its momentum, but because we are growing the balance sheet at a faster pace, last year we only grew by 30%, and previous to last year, we grew by only 9%. So you can understand that retaining the same CASA ratio itself was a task, because you have to grow the CASA also at a similar pace. Okay. So given that perspective, as long as the balance sheet growth is much faster, CASA ratio, we will be happy to retain where we are, around 32% right now, in the next 2 to 3 years. Because you must understand that suppose the balance sheet grows by 25%, then CASA also has to provide 25% to retain the same ratio. But what we are doing is, we hope that we'll start doing better than that in the next 1 or 2 years, because we have invested into a large sales team which will bring in new customers. Because one of the key objectives of the bank to add new customers to the bank. And when you want to add new customers, you have to go and acquire them. They will not come to the branch and open their accounts. So given that we are creating a huge sales force who will go and acquire new customers, and that is what is going to build CASA. We have also launched transaction banking as a separate vertical, which will help us in building the CA, which is current account, along with transaction banking solutions and along with our SME and wholesale businesses. So between these two, between CA and SA, we expect us to start getting some momentum, but that will start happening only from next year, because what we invest this year will start paying dividends next year.
Now, coming to the gold loan is about 45% of your total loan book, and your long-term trajectory is to reduce it to 20%. But gold loan is a very secured business. Why do you want to reduce it?
No, I think I'll put it differently. We don't want to reduce it. We want to grow it at the same pace, if not at a faster pace.
Okay.
But our other businesses, the overall pie will grow. Okay. Because retail, we have a very small portfolio, and we are launching all products. We have built up a huge team out there. With the technology falling in place, what we are doing right now, we will scale up the retail business. We have created a huge SME team now, and with a great leader there. So given that kind of and transaction banking also, we have got a separate vertical, which I talked about. So when we are, and India is about SME, right? SME growth is coming in India. If India has to go at a GDP, and India has to go from a 3.5 trillion to 7 trillion in the next 7 to 10 years. So if you have to do all that, the SME will be the mainstay of the economy. So we have to participate in that, and we will participate in that. So SME can grow. So because of all this is how we will grow the overall balance sheet. Otherwise, how could we dream of becoming a mixed sector bank by 2030? We can't, right?
So the other businesses will also grow. So as a proportion, gold loan will come down.
That's right.
The other issue was on this when RBI approved Fairfax to take 51% stake in the bank in 2018. There was a roadmap to bring down the promoter stake. I think by another 5% by the next 5 years, which is 2023. Right now, the promoter shareholding is at 49.72%. Are you in talks with investor to bring down promoter stake?
See, this is in the domain of Fairfax. I would not know, because I'm given the job of running the bank, which I'm doing. What conversation is happening between Fairfax and RBI is in their domain. But what I know in public domain is 26% is what for all private sector banks in 15 years, I think, from the
right.
Of their investments. So which is still a long way to go, another 10 years to go. In between, what happens is a conversation between RBI and Fairfax. I'm not privy to that.
The other issue is the capital adequacy ratio. You are sitting on 27% capital adequacy ratio with 26% Tier 1 capital. What is the reason to have so much capital? Because capital, after all, has a cost.
Very good question again, Manojit. But let me tell you that gold loan is, the risk-weighted assets are so low. I mean, it's zero effectively. And our portfolio quality has continuously improved across all our businesses. And hence, you can understand that last year when we grew our asset book by 30%, our capital adequacy actually went up. So it is not coming at the cost of growth, it is coming in spite of growth. What it means is that we are doing the businesses which one side is our quality of the portfolio is getting better and hence our risk weights are coming down. And B is gold being 47% of our portfolio, where effectively risk weights are zero. But this is too good to be true for long run. And as you see that as the trajectory of SME and retail starts going up, where risk weights are much higher, automatically this will come down. But that does not mean that's a bad business to do, because with those ROA becomes better because you have the ability to cross-sell multiple products. In a gold loan business, it's very difficult to cross-sell multiple products. So risk weights will be higher, but your ability to garner multiple revenues across cross-sell, including liability, will be higher. So it's a pure play banking business which we'll get into gradually. So this will come down over a period of time.
And finally, RBI has recently issued a discussion paper on expected credit loss framework. How prepared is CSB Bank to adopt those framework if it comes, say, from 1st April 2025? What kind of additional capital requirement you will have?
We have discussed this internally. We are looking at the various discussion points, and we had done some amount of detailed understanding of this. While we cannot really discuss that, that's neither in public domain, nor we exactly don't know what it will turn out to be. So we have done various scenario analysis, but it will not have too much of an impact on us, primarily because of 2-3 reasons. One is our balance sheet still is small. B is our risk weights are, expected credit loss. Generally, credit loss in gold loans is very low. And also, we have taken accelerated provisions and very conservative provisions. And as we are sitting on a contingency provision of around 106 crores. So at this point of time, we have enough dry powder in our stable at this point of time to take care of anything. But more than this, it is difficult to tell at this point of time because we really don't know what the rules of the game will be.
But overall, you have a sense that the bank is adequately capitalized and portfolio will not have a problem adopting the CL framework.
Absolutely. Not only capitalized, I think in terms of P&L, the impact will be reasonably limited because we are sitting on excess provisions at this point of time. Our PCR today is upward of 90%. So to that extent, I think we have reasonable coverage there.
Right. On that note, thank you, Mr. Mondal, for speaking to Business Standard. It was a pleasure talking to you.
Thank you, Manojit, and thank you for having me again. Thank you.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.